No, there's no differences at all. We really, as we're what's known as an equity lender. And what that means is that we focus primarily on how much equity someone has in the home and also the home itself. How marketable is that home? Those are the two things we primarily look at. So whether you are a resident or a non-resident, the same rules are going to apply in both cases. So I like to give the example of, for example, if we had one home that was identical on Grace Bay to a home that was on North Caicos, and the homes are exactly the same, the pricing was set according to what the market should be in those two markets. The marketability in Provo is so much higher than it would be on North Caicos. So that's where, as a company, we have to, I guess, mitigate the risks for our clients or for our investors. So that's why we choose to lend in Provo, because if there's ever any issues, we know we can sell that property a lot quicker on Grace Bay Beach than we can, for example, on a beach in North Caicos. So the marketability really is the key. Now, having said that, it also goes the other way. So if we have a non-resident or a resident and they're looking in an area where we don't lend, then it doesn't matter who they are, we're not going to do that loan. So really, when you're talking non-residents or residents, there's no difference between the two for us in terms of the qualification.
Okay. What about the percentage down? Like, what is there a difference, resident versus non-resident? And what is the percentage that you have?
So it depends on what you're buying, but generally, if it's an existing home or condo, we're looking at 35% down. So we'll finance 65% of the property, but just the property. We don't finance furniture. So we'll get an appraisal done, and whatever they determine the value is minus the furniture is what we'll finance.
Okay. So in talking about numbers, I know with some companies, they actually lend, they wouldn't lend at, based on a minimum a month. So for example, if your purchase is under 250,000, they would not lend on it. Do you also have that same minimum threshold, or do you lend on any real estate?
We don't have a specific rule about the amount that the person can spend, but we do kind of have a guideline internally that we don't want to lend less than $100,000, or if we do, not too much less. So generally, if you're, say, looking in Provo, because that's, again, where we're kind of focused right now, that would be maybe $150,000 or $160,000 a lot. So that would kind of be our minimum. But again, we don't have any hard and fast minimum rules. It's just kind of guidelines.
Okay. So I can't recall if you had said before, do you lend on pre-construction for pre-construction purposes?
Okay. So
like someone is
by
buying.
That question,
Sorry, I can go first. Sorry. Sure. I know that pre-construction takes the shape of different scenarios, because there could be someone buying pre-construction where they purchase the land outright, and then they are then at a pre-construction stage for the building until it's completed. But then at the same time, I know that there is where you may have to just put a deposit down, and they are not required to pay those monthly payments, and then the lender will just provide the final balance at the end of construction. So I'm not sure what type of lending you do, but I'm just generally on pre-construction. Do you lend on pre-construction?
Okay, so I'm going to answer it this way because I've been getting a lot of inquiries on this, and I thought it kind of touched a little bit into what your question was. There is some new developments coming on that are condos, and a lot of people are wanting to buy these condos with pre-construction financing. Now, in those situations, we can't really get involved in those. We can only finance them when they're done. And the reason for that is, as a lender, we're kind of stuck in no man's land if things go sideways with the developer. Really, we don't have enough money to complete the project, the full project. And really, we only have a mortgage on one of the units. So it's really kind of a non-starter anyways. We can't sell the unit because it's only partially done. And the clients, chances are they're going to walk away because they've got a unit that's half done that they can't use. So they're going to leave. So that's kind of the reason why we don't get involved in those pre-construction condo developments. But if you're talking about construction in terms of buying land and building a villa, then absolutely, we have construction financing for those.
Okay. So is there like, in talking about that building construction then, do you have like a set criteria for something like that? Meaning that should that person have to put down like, say, 20% or be able to, before you can land, what is the requirements for building construction?
Right. So we treat it very similar to our regular existing loans. So we want the client to have 35% equity in the total cost. So that includes the land and the construction. So for us, we kind of we set our guidelines where we never want to exceed 65% of whatever the value is at that point in time. So that's why we will have appraisers go out through the process and assess the values to make sure that we don't exceed that 65% threshold.